Hello and good morning. Welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be going over the major events to expect in the markets this week. And once we cover that, we'll also be doing some technical analysis to try to understand the major trends in major currencies. We'll also try to understand where the markets are headed. And once we cover that, hopefully you will be able to trade from an informed perspective. So once you join in, kindly say hi on the live comment section, and these will confirm everything is working just fine. So what are the key events that are currently moving the markets today? What are the key developments? What should we be focusing on while trading today? And once we cover these, we'll try to understand where the markets might be headed next. So let's get started. So first things first, we focus on the economic calendar. And as you can see, we don't have much happening in the economic calendar today. We only have one key highlight event. And this is a speech from the Swiss National Bank chair, Jordan, who will be speaking at 6:15 p.m. So he's due to speak at an event hosted by the Swiss National Bank in Zurich. So there is a good chance that there will be volatility in all CHF pairs after the speech. And this is mainly concerning the Swiss National Bank monetary policy, especially considering that in the last meeting, they made a surprise rate cut down to 1.5%. So at the same time, inflation in Switzerland has continued to drop, with the last or the latest data showing a drop to 1.0%, down from 1.2%. So the early morning news, we had average cash earnings for Japan coming in at 1.8% as expected, but also an increase from the previous reading of 1.5%. So the current account showed a big drop to 1.37 trillion, down from 2.75 trillion. Then we also had the unemployment rate for Switzerland coming in at just want to refresh this. Somehow it hasn't loaded yet. So the unemployment rate came at 2.3%, slightly higher than the previous reading and expectation of 2.2%. Then we had a surprise increase in German industrial production for the second consecutive month. And trade balance in Germany continued sliding down to 21.4 billion, down from 27.5 billion in the last month. So the key focus for the day remains the SNB chair's speech, and that's 6:15 p.m. So over the week, we'll be expecting more news. We have three major central banks announcing their interest rate decisions later in the week. So the first one will be the Reserve Bank of New Zealand, which is expected to hold interest rates at the current level of 5.50%. Second one will be the Bank of Canada, which will be expected to hold interest rates steady at 5.0%. And the third one will be the European Central Bank, or the ECB, which is expected to hold interest rates steady at 4.5%. So besides that, we'll be having other major news, and I'll try to do a filter here, remove these low impact news, only focus on the high impact news. So for the US side, I believe the most important data for the week will be the consumer price index, or the CPI, which is a measure of inflation. And we're expecting that in the last 1 month, inflation ticked higher to 3.4%, up from the previous reading of 3.2%. So besides that, we'll also be looking at FOMC meeting minutes on Wednesday at 9 p.m. Then later on, we'll get Chinese CPI on Thursday at 4:30 a.m., where we expect Chinese inflation ticked higher by 0.4%. And this is a weakening from the previous reading of 0.7%. So we will be looking at producer price index, which is a forward measure of inflation. This will be for the US on Thursday at 3:30 p.m., where we expect an uptick of 0.2% month over month for core. And for the overall producer price index, an uptick of 0.3%. So besides that, there will be weekly unemployment claims from the US, the ECB press conference after the ECB interest rate decision. And as we approach the end of the week, we focus on the UK GDP as well as the preliminary University of Michigan Consumer Sentiment Survey. So that's the key highlight for the week. So besides this, what else is moving the market this week? So I believe one of the key concerns that a lot of investors are concerned about is a potential attack on Israel by Iran. So last week on Monday, we know that Israel managed to bomb one of the key sites in Iran, and Iran decided that they are going to respond. So Iran has vowed retaliation for an Israeli attack on its consulate in Damascus last Monday. So the strike was part of a pattern of escalated Israeli attacks in Syria since the eruption of the Gaza war last October. So these attacks have often targeted warehouses, trucks, and airports, and Israelis' declared aim for them is degrading Iran's transnational supply network for the Lebanese group Hezbollah. So Monday's attack was different, however, in that it struck a diplomatic facility directly challenging Iran's sovereignty and killed senior leaders in the Islamic Revolutionary Guards Corps. So the most high-profile casualty was Brigadier General Mohammed Riza Zahedi, a veteran commander who led the IRGC Foreign Operations Wing, the Quds Force in Syria as well as Lebanon. So how will Iran respond? As it turns out, Tehran has a lot of options, but none of them are very good. So main reason you've been seeing a major spike in gold is because of this expectation that the current Israel-Gaza war could potentially escalate. And if Iran manages to manage with an attack on Israel, then that could escalate things further, and investors are looking for a safe haven to protect themselves from this, and in so doing, you find that they are buying safe haven assets. So that's a key concern and a key market theme this week. So besides that, there's also the issue of the Ukraine war. So the latest key development is that a nuclear facility in Ukraine that is currently being controlled by Russia was hit by a drone strike over the weekend. So a new drone attack on Ukraine's Zaporizhia power plant has raised the risk of a major nuclear incident, the UN's atomic watchdog has warned. So Russia said Ukraine was behind the attack, which it said it injured 3 people. Ukraine has denied involvement. So the giant Russian-held nuclear plant with 6 reactors is on the front line of the Russia-Ukraine conflict. So the UN's International Atomic Energy Agency has repeatedly warned against such attacks. So in this case, if it happens to go nuclear and maybe something happens with this facility, it would represent an escalation of the Russia-Ukraine conflict. And in so doing, it may affect how investors perceive the markets today. So one of the reactions we are seeing is an increased bet on commodities, and that makes the price of gold, silver, as well as oil keep going up. So that's a key highlight for this week. Sorry, I wasn't sharing this. So it's a BBC article, Ukraine war, UN body urges restraint after Zaporizhia nuclear plant was hit. So what else is moving the markets this week? So let's look at an update this morning from CNBC. So Asia markets mostly higher ahead of central bank decisions, US and China inflation data this week. So Asia Pacific markets were largely up ahead of central bank decisions this week, with investors also awaiting inflation numbers from the US as from China. So there will be a couple of central bank decisions this week. This includes the Central Bank of Korea, the Reserve Bank of New Zealand, the Bank of Thailand, the Central Bank of Philippines, and of course the European Central Bank. So moving faster, trying to cover as much as I can. So the Philippine Central Bank, and this was slightly a few minutes ago, 23 minutes ago, decided to keep interest rates unchanged at the current level of 6.5%. India markets hit new all-time highs as metal stocks surge. So India Sensex and Nifty 50 indices hit fresh all-time highs on Monday, powered by metal stocks such as Tata Steel as well as JSW Steel. So besides that, I don't know if there's any other key highlight for the week. So I'm just checking my tabs here. Yes, there's one more highlight. Southwest Boeing loses engine cover. Here is what to know. So the challenges facing Boeing planes are quite continuing. So with the latest development being an engine that lost its engine cover. So what's an engine covering cover? It's an engine covering cover is a protective covering that houses the airplane engine made of metal or composite material. So the covering is part of the nacelle, which is separate from the fuselage and houses the engine and other equipment such as fuel tanks or electrical systems. So that's a key development that we'll be following up on this week. And as we approach the end of the news side, before we go into technical analysis, I want to check to make sure that we got everything. Awesome. I think that's it. So now we might get into the favorite part, and this is the technical analysis side. So once we cover the technical analysis, then we shift over to understanding the key developments for the day. Yeah, I'm hoping everyone can see this now. Hello, Haron. Hello, Lamik. Hello, Manthi. Thank you guys for joining, and I appreciate you. So on the chart side, I think there's quite a big number of things happening currently. So one of the key highlights is the dollar index that has been pretty strong for the last couple of weeks. And what we saw last week was some form of pullback in the dollar index, which took about 3 days moving downwards. And then towards the end of the week, on Thursday and Friday, we saw the dollar index making some recovery on the lower trend line. And there's a good chance it will continue that recovery this week. So we have become accustomed to this kind of movement, a big sell-off followed by a recovery, sell-off, recovery, and now we are on the phase where the dollar index is seemingly recovering from the big sell-off last week. So with this in mind, you can already see other charts shaping up. For instance, the Japanese yen was able to strengthen against the dollar on Tuesday, Wednesday, and Thursday. But then on Friday, there was a very strong recovery, and we are yet back to the same highs that have been dominating these charts. So for USD JPY, it seems more likely that the investors are betting against the Bank of Japan. So despite the strong talk by the Japanese Ministry of Finance as well as the Bank of Japan, what we are seeing is investors continuously bidding the dollar higher compared to the Japanese yen. And now we are back at a territory where the Bank of Japan has intervened in the currency markets before. So it has happened several times over the last couple of years. We have seen it happen here. This was back in 2022. Then last year, we saw the market also being sold off from this area here. And now the market is back to the same spot. So in this case, we are seeing quite a good number of tests. I would say these are 4 times the USD JPY has attempted to break the 151.9 price level. And now the price level is back to the same area, and there's a good chance we will be seeing a breakout happening from here. So there's also the opportunity where the market could reverse, similar with what we saw last week. So this movement here was quite easy to capture from that resistance. So now we could be seeing something similar, but then it's a wait and see kind of market. So in this case, for the short run intraday trades, I expect the market to potentially break 151.9. So if there's a break above 151.9, it means that we start looking for bullish positions. But if the market fails to break this area, then it's an opportunity to now start looking for short selling positions. So as for Euro USD, we saw this bounce happening. The euro was pretty strong against the dollar. But now that we are in the ECB week, or the week where the European Central Bank is set to make an interest rate decision, there's a good chance we could be seeing the dollar strengthening from here and the Euro USD moving back to its previous low. So the real question will be whether the ECB will be the first mover in cutting interest rates. And if it happens to be so, then there's a good chance that the euro will be weakening against the dollar. So for pound USD, this is what we are seeing. We found the market hitting this resistance last week. Then after hitting that area, there was a huge drop to our target of around 1.25733, which nullified the earlier projection that the market might be headed up. But now it's time to sober up and start thinking of the market as is. So from what we are seeing here, it's more of a market that is moving sideways over the last couple of weeks. So if you view it this way, then you'd notice that the overall price action for pound USD has just been sideways, which means that it makes more sense to trade at the extreme prices. And the extreme prices represents the resistance here, as well as the support along this area. So just a moment. So in this case, we will be looking to trade once we see the extremes, but for now, it's a wait and see scenario for pound USD. For USD CAD, we have seen the market hitting this resistance several times, and every time moving back downwards. So on Friday, there was a very strong acceleration of the dollar, which was faced with an instant sell-off. And then the market went back, retested this resistance, and pulled back downwards, which basically indicates that the Canadian dollar is strengthening at these levels. So also, it's important to note that on the forward chart, we have an overall trend line. And now that the market is just bouncing from the upper trend line, it seems more likely that the market will be headed back downwards. So in this case, looking for short selling positions might be in order. After the rejection here and the retest of this area, there's a good chance we could be seeing some further downside movement in USD CAD. So as for gold, we hit a new all-time high this morning. So as I explained earlier, there's more and more uncertainties happening in the markets with the Israel case, the Russia-Ukraine case, and now central banks in the BRICS countries buying even more gold, leading to even higher prices. So now that we have a pullback, similar to what happened in the morning, so you can see how the market opened with a pullback and then with a strong rally, hitting a new all-time high. So the highest price we have seen so far in gold is 23.54. So now that we are seeing another pullback here, there's a good chance we will be seeing the market pushing for another high, and that will represent a nice buying opportunity. So for now, it seems like gold is just moving sideways, but then after we get more volume from the London session, there's a good chance that gold will be gunning for 23.54 again. So there is a good chance that we continue seeing the rally in gold, given the uncertainties in the market right now. So there was a big sell-off last week, especially after the development of the new tensions between Iran and Israel. So that led to a big sell-off in the Nasdaq index with some form of recovery, about 50% on Friday. But then now we start a new week with a focus on US CPI. And I believe the stocks are still strong, though there's still a narrative that interest rates might stay higher for longer. So one thing I would be concerned about is this trend line that has been developing in the last 2 weeks, indicating that the Nasdaq is now unable to form higher highs. And now you can see the attempted break on the lower trend line, which indicates that there is more bearish pressure than bullish. So from the forward chart, this is how it looks like. So there's a good chance we could be seeing some further sell side pressure on the Nasdaq index. So I'll be watching closely on a potential break of this trend line again. So if there's a break, then that would represent a short selling opportunity. US 30 or the Dow Jones Industrial Average also made a similar thing. So after managing to form this bounce here, you'll notice that there was this big sell-off on Thursday, a recovery that retested this previous trend line, and now the market is headed lower. So it's a classic book breakout where the market makes a breakout, pulls back to retest, and then continues in that direction. So in this case, for the Dow Jones, expect a continuation of this bearish momentum. So for the US 500 or the S&P 500, it's the same thing. So last week we saw the rally here, and the market was unable to form a higher high. So market pulled back downwards, and that now a retest of the breakout point, and now we are seeing a continuation. So in this case, I would be betting more on a continuation of this bearish momentum. So from the daily chart, this is how it looks like. So you can see that the red candles indicate very strong selling pressure. So there is a good chance we should be seeing some further downside, especially for today. So for US equities, I expect to see some further downside, whereas for oil, we are seeing quite a strong recovery. So for Brent oil, it was a strong bullish momentum last week, with a big sell-off happening towards the end of the trading day on Friday. So today we started with a continuation of the same, but then if you focus on the green candlestick with a long tail on the lower side, you notice the strong bounce from this area. So this was the same low on Thursday as well as on Wednesday. So the market tested that area, and then from there was a strong bounce, and it seems likely that the market will now be headed higher, looking to retest the previous high of $91.484. So nothing have changed fundamentally, and this means that the same factors that were contributing to a strong oil rally last week are expected to continue this week. So as for Bitcoin, we have had a very strong bounce from this area here. After we saw the consolidation here, the market made a breakout, pulled back to the same breakout point, and then rallied. Then we had the weekend gap, the market jumping higher. Now today we have opened with a strong momentum, and price has already hit a resistance of $71,343 per Bitcoin. So from the forward chart, this is how it looks like. So if you manage to break 71, then we could be facing a new all-time high on 73,758, and potentially an extension of the rally from there, especially considering that the halving is getting closer. Remember, the halving is expected to be around the 20th or 21st of April this year. So that's about 12 to 13 days from now, which means that there should be some bullish momentum expected this week. So for the European equities, we are seeing a recovery after the big sell-off last week. So with investors expecting a potential rate cut in June for the ECB, it raises more bullish sentiment for European equities. So you can see the strong bounce on Friday, and today it seems like the market is continuing with the recovery. So the recovery could potentially extend to this area here around 5,064, and this is for the Euro stocks. So for the French stock market index, the French 40 index, we eventually had a breakout towards the lower side. So the bounce towards the upper side failed, and what we saw is the continued momentum downwards. So if you think of this as the major resistance and the upper resistance here, then the market has bounced quite strongly and could be headed to the previous high here. So it seems likely that European equities might be quite bullish this week. So for the UK FTSE 100, we have a book pattern. It's called a head and shoulder pattern. So for those who are not familiar with it, the market usually forms a shoulder first, goes back to the same area that we describe as a neckline. Then from here, it goes up and forms a head, goes back to the same area that we describe as a neckline. And then it goes back up again, forming another high that is often similar or the same as the first shoulder, and then gets back to the neckline. So that completes the pattern. It's often a reversal pattern, indicating that the bullish momentum has ended, and there's a likelihood that the market now starts trending downwards. So in this case, if the previous levels are anything to go by, then we should be expecting to see the market retesting this trend line and potentially heading much lower. So in this case, if you think of this area here, there is a good chance we could be seeing a nice breakout and a continuation down towards the lower trend line. So for USD trading against the Swiss franc, we are seeing quite a strong bounce from this area here. So remember the Swiss franc, the Swiss National Bank was the first to make a major shift in policy where it decided to cut interest rates, and in this case, weakened the local currency against the dollar. So as a result, we have seen quite a strong momentum. So since the decision here, there was a big rally in USD CHF. That continued for a while, and last week there was a couple of pullbacks. You can see right here and here and here. This is Wednesday, Thursday, and Friday. But now, as we start a new week, it seems more likely that now we're extending the bullish momentum higher. And if you look at a smaller time frame, you'll notice that there was a trend, and the trend line seems to be breaking right now. So I just want to indicate the highs that we were seeing last week. So what we are seeing here on the 15 minutes chart is a clean break of that trend line. So the market was finding resistance on the same level along the trend line, but now we are seeing a breakout here, which indicates a strong dollar that might continue rallying against the Swiss franc. So that's it for the day. Now I'll be looking at the questions to see if there's any questions you guys may have raised in the comment section. And of course, if you're a big fan of our podcast, you should know that we have 2 new episodes that are out, one on the Financially Incorrect podcast and the other one on the Bullish Banter podcast. Quite some eye-opening topics. Make sure to check them out on all podcast platforms, and these includes YouTube. So hello, Mwangi, Njeri, and Jeremiah. Good question here. How do you identify liquidity mitigation on a chart? It's quite clear, no matter how you try to frame this, it's most often around the same levels of support and resistance. So an example would be the highest price that we saw on gold last week. So you realize that this was working as the resistance, but then today, after the market broke out and went above this area to form a new high, the pullback just happened to bounce off at the same exact area, which was the resistance, and now turned into a support. So there's a good question. How do you use the Fibonacci retracement tool? I think that requires a full session, but I can give a very quick and simple demonstration. I don't know which is the. It's better used in a trending market, which is the best one to use. Let's see if I can find one. Okay, let's use the Nasdaq 100 index. So the market made a big move on Thursday and then replaced on Friday. So if we are to use the Fibonacci retracement, we would go to Insert, Objects, Fibonacci, and then Retracement. So you find the swing high point, drag that to swing low point, and then try to estimate the market will bounce from. So you'll notice that after the big 100% move, the market retraced 23.6, that 50, and then on the 61.8 price level, notice price attempted to break, failed, and moved back downwards. So in this, the market made a retracement of 61.8%, slightly higher. And once it got to that level, now it's moving back downwards. I hope that's just a simple explanation, but you'll have to dig deeper to understand these levels and how they work. I think this one we also need a different session. Do a session on we could do that. I'll briefly explain about the different cycles for retracement, and we have done this before. It's available on the should be the Novice to Pro series. What is smart money concept? It's a new the same theory we have been covering with support resistance. It's just a product rebranded for you. Do you think USD CHF is forming the head and shoulder pattern on the 1 hour and 4 hour time frame? I think that's a really good question. USD CHF, yes, it seems likely, but if you think this is as the first shoulder, then the head, and now that the market is going for another shoulder, but then from the fundamentals of it seems more likely that this will be a continuation rather than a head and shoulder pattern. So in this case, especially after the breakout here, it's not like the individual move back, down, up, down. Here you can see there was a pattern developing over the last week. So the pattern was right here. I know you can all see this. So you can see how the market was forming this momentum here, followed by this, and then this. So it was more of a bearish channel. Market failed to form lower lows, and now it's breaking out to potentially form higher highs. So in this case, I'll be betting more on a continuation rather than a head and shoulder pattern. What's your view on pound USD? I mentioned that there is an overall sideways momentum on pound USD. So the overall momentum is just sideways. So I would only be looking for opportunities if the market was to hit the upper side or the lower side of this sideways momentum rather than trade here in the middle. When I have a clear direction, that would make more sense. So last question, the Thursday market pulse. It's still something we are considering to try and repackage it. Thank you for the request. So it hasn't happened yet, but also we are considering on developing more programs to give you more value. So thank you very much, guys. Thank you for your time. Remember to like the video, to share the video with your communities, and that will help us give value to more traders.